Welcome back. Well, the markets continue to reel under some pressure. We're 130 points down on the Nifty, but as we have been telling you, that the broader markets is where there's a lot of pain. That said, when there is pain, there's always opportunity that comes about, and that's why select stocks will come on your radar. To help us out with how things are shaping up, we have Mr. Siva, the Managing Director at India Avenue Investment Management, who joins us on the show here. Hi, Mr. Siva. Thanks a lot for joining in. Well, you seem to be managing roughly around 8 to around 900 crores or thereabouts. And I'm looking at your portfolio construct, and it appears that Pharma is one of the top weighted stocks out there. So could you tell us how you're approaching the pharma theme, and if there's something else that you like out there as well?
So broadly, we're overweight in healthcare, which is predominantly in pharma.
Okay.
And largely that's because of a view that strategic growth in the sector is going to play out over the next 3 to 4 years. We've already been an established holder of overweight pharma for about 3 years.
Okay.
When valuations were a little bit further south than where they are today. And our view is, India will win a greater share of the market pie from a global perspective.
Okay. Yeah. All right. So you'll continue to maintain. The reason I ask you about Oro is because it's down close to around 20% from the recent peak. So, it could come back down to those valuations that you'll have got in at.
Yeah.
So would you remain constructive at the stock even at current levels?
Yeah, because I think thematically we want to play that exporting story in generic pharmaceuticals. We think there's a patent cliff coming up in the next couple of years, and companies like Oro and other exporters will be best placed to benefit from it.
What do you make of the IT space? Because I see you having a fair amount of exposure via Infosys. There is HCL Tech. I see Coforge, and also names like Reddington, which have the IT e-services sort of portfolio. What are your thoughts here? Because these stocks also have been underperformers, and at the same time, the outlook looks fairly grim as well, with ordering activity not picking up as fast as the street wanted to, and then you have obviously the constant threat of artificial intelligence.
Yeah, so we, as you rightly noted, pharma and IT are the two areas we're overweight. We like the inside-out story. Previously, in the last decade, it was very much about consumption, financials. And our thesis, at least for the early part of this decade, has been those areas may be more challenged.
Yes.
And India will win more of a global pie, be it pharma, be it in information technology. Whether the industry is challenged because of what's happening globally is one issue. But secondly, we feel the Indian firms are best placed to take on engagement with the cloud, artificial intelligence, integration. If you look at integration that some of these firms are doing for global companies, I find a lot of the globals are still a long way behind, and that education process can be best coming from some of these companies that have been practiced in that area.
Okay, all right. Let's look inward now. Look at the domestic story, and I was looking at the two-wheeler space, and from that space, I think your key bet is HeroMoto Corp. I think you'll have been holders for a while as well. What makes HeroMoto Corp, get preference in comparison to, say, a TVS or a Bajaj Auto? If you could give us your rationale, and also what are you making? There are some changes at the top out there. So how would you change your view?
Yeah, so as you said, it's a holding which we've had pretty much post-COVID, when valuations were further south. We found, the introduction of new products, new partnerships that they've had has, I'm not saying that there is only one two-wheeler company that works. We've also at times owned Eicher Motors as part of that journey.
Yeah.
Today we also own some Bajaj Auto, but Hero has been realistically the position we've held for the longest. So we're fairly comfortable with that and holding it from a longer term view as a domestic play on consumption, particularly in the rural space, where we expect perhaps a little bit of an uptick over time.
Right. Could you give us a sense on a couple of factors? One is that, what is the churn in your portfolio typically? I mean, how long do you hold companies for, and what's your exit rationale? And secondly, I look at your India 2030 fund. You're betting at India for the future. And what's absent are some of these futuristic companies that everyone keeps talking about, be it, some in the food delivery space, some in the digital beauty space, or value fashion, a bunch of them, all of them conspicuous by their absence.
Yeah, so there's two parts to that question, and I'll focus on the second one first. So essentially, our view on India 2030 is not necessarily futuristic. It's where we think India's, let's say, if you look at the MSCI India, what that might look like in 2030. You know, we want to partner with those firms where we feel the greater component of the growth story will be driven by those industries. And we think pharma and IT were underrepresented in where India could get to by 2030, rather than say we'll hold businesses that we think could, find a success story. The problem is, in some of those industries, we don't know who the winner is going to be, right? So we don't. We're a bit cautious about their valuations being high without the profitability necessarily already justifying that valuation.
All right. Before we let you go, final question with regard to the financials as well as the banking SPAC. Some of the top banks out there, like an HDFC Bank, actually haven't given much returns in the last few years. They've been relative underperformers. HDFC Bank, Kotak Mahindra Bank. I think that's a sector you're betting on. Tell us more.
Actually, we've been underweight that sector quite significantly. I think we have about 20% in our portfolio.
In comparison to the benchmark, you're saying that relatively underweight.
Relatively underweight, and that India 2030 fund hardly has any financials. I think we only have Shriram in that. So essentially our view is it's more a challenging environment for the financials, particularly as consumption has been weak and we get a little bit of increase in asset quality issues, that perhaps some of these companies which had flourished in the last decade, corporates also have pretty healthy balance sheets, so their need to go and borrow, we feel, is going to have an impact on credit growth, whereas most corporates are obviously receiving funding from the equity markets at the moment.
Got that, Mugunthan. Thank you so much for joining in and giving us your view on markets, a whole host of sectors, your top bets, etc. What from both of us we can say is just ensure that the foreign money keeps coming into India, because the kind of selling that we've seen over the last three and a half months has been quite brutal. So you've been doing your way, standing at the door of such a massive FII exit on a regular basis itself. We wish you good luck with your portfolio.
Thank you very much for your time.
Thanks.
With that, we'll take